Hi, I'm Steve Richardson. If it's tax time, you're probably looking for as many deductions as you can get to either increase your refund or decrease the amount of taxes that you may owe. Well, if you're paying on student loans, I've got some good news for you. Some of that interest on your student loans might be tax deductible. Well, what qualifies as tax deductible? Well, first of all, the loan that you're paying the interest on has to have been taken out solely for qualified educational expenses. It has to be a student loan, all right? And the money has to have been used for educational expenses in order to get a deduction. And that student loan has to be for you, your spouse, or one of your dependents. And that person, you or that other person that got the loan, has to have been enrolled at least half time when that loan was taken out at a qualified institution that would result in some sort of degree or certificate or something like that. And finally, there's an income cap. You have to have a modified adjusted gross income of no more than $80,000 for a single person, or if you're married and filing jointly, no more than $160,000. Well, what is a modified adjusted gross income? Well, for most people, it's your adjusted gross income. There are some exceptions. There are some expenses that need to be added back into an adjusted gross income, and a tax professional can help you with that. But in most cases, take a look at your adjusted gross income, and that's usually the indicator of whether you qualify. And what counts as interest? Well, it can be the loan origination fee. It can be any interest that you paid during the tax year on that loan. It can be if you got a line of credit on a credit card or a loan, and that line of credit was used solely for qualified educational expenses, then the interest on that can be tax deductible, not just on a traditional student loan. Also, capitalized interest. Let's say you were in a forbearance or a deferment. You came out and interest that accrued during that period of time was capitalized into the loan. In other words, the interest was added on to the principal by the lender. Well, any monies that you paid during that tax year that might have gone towards that interest can be tax deductible. Now, there's a maximum of $2,500 in a deduction for interest paid on student loans. So you can't, if you paid more than that, you can't deduct all of it. And the best thing I can tell you is to consult with a tax professional. They can advise you more specifically on whether you can deduct this interest from your tax return. So talk to a tax professional as you're preparing your tax return for filing, and you might get a bigger deduction or pay less in taxes because you had those student loans.